Hello traders, hello everyone. Welcome to our new webinar. It's Monday, February 23rd, so hope everyone had a wonderful weekend. Just let me know if everything is fine. Okay, so seems like we are good to go. Okay, so as you know, stocks markets are somehow sideways, but stocks are still holding support. We even saw some nice short-term recovery at the end of last week after the US Supreme Court voided most of the tariffs that Trump imposed back in 2025. But as you know, in his style, he's already responding, making some new threats. So we never know how far he can go with his rhetorics and especially with actions. So there's always a lot of uncertainty when it comes to Trump decisions. And then you have also US-Iran tensions, and that's something that keeps the market somehow neutral. And I would not be surprised to see this sideways price action maybe on stocks till Wednesday, because on Wednesday, as you know, we will get after the close, we will get nvidia earnings. Now if we start with US yields, basically we are still in consolidation here, and if you were watching our end of the year, or I should say maybe 2026 video outlook, then you know that in that video I've been talking about quite in detail about the US yields, dollar and other stuff. And basically I still think that we are here moving sideways, trapped in a fourth wave triangle, and that sooner or later we will see a resumption higher. But of course, if this is really a triangle, then we could still be in the middle of this range and could still possibly see a retest of this April 2025 spike low when Trump announced these tariffs last year. So I still think that it's a very important big support, and maybe we can retest it and then we see a new turn to the upside. And as you know, especially with all of these cycles could come into effect when Trump will announce new president. I mean, I think that Paul will be replaced in May, if I'm not mistaken. So maybe that's how long markets could basically be, especially US yields could basically be moving sideways here. But if we consider that this is still just a longer pause within uptrend, and if we look at the dollar, then we can basically expect that when the US yields will start stabilizing, that the US dollar will do the same. And in the near term, of course, there is basically a chance that the US yields, as I said, could retest these levels, and maybe dollar will see a bit of more weakness. But keep in mind that these correlations were quite broken recently, and that's usually happens when the market is moving sideways. Those correlations will not be tick by tick. It's, of course, correlations are there if you will zoom out. So with that being said, if the US yields will see a bit of more weakness, maybe the dollar itself will still retest this lower range of the support here around 97, 96.50 is the big support. Notice that we are observing the idea of potential irregular formation here in wave B or wave 2 down from the beginning of February actually. So there's still a chance that we will see slightly better support levels that will be retested before market will eventually turn to the upside. But if we see a daily close above 98 here, then I think that there is a chance that we are already in the third leg, pushing prices later on towards 99, maybe even 100. So for now, I think that as long as the stocks are sideways, dollar could also be sideways, and maybe even could see a retest of the lower range here if that flat is really the case here. But keep in mind that big picture is still the same. We could either be moving down here into wave 5 of C, or maybe if you look at the alternate count here, what if that's wave B triangle and you're in a wave C? Of course, there could be much lower prices, but keep in mind that moves out of a triangle are anyhow final in a sequence. So my opinion is that we are still going to see some strong support for the US dollar. Maybe this one has already been reached, and we will, but it's very possible, if not probable, that market will most likely move sideways rather than turn bullish. It doesn't mean that we must turn back to bullish mode here, but if stocks would really see any kind of a real setback, of course dollar will really very quickly pick up the gains here. Now looking at the euro dollar, obviously same but opposite picture here. I still think that we are basically bearish as long as we are holding below that recent spike high here from a few weeks back. So I still think that there is a greater chance that we will move back into the middle of this range that been basically there since June of 2025, and we could even retest 1.6 level here. So from an Elliott wave perspective, it would be nice to see 119.30, 119.50 level retested here. That's when a lot of traders would be probably on the wrong side of the market, because as you know, some traders will try to short the market after this breakout, then they will be stopped out on a rally, then market makes a new swing high, they will change the bias, they will turn back to bullish mode, and that's exactly when both sides of the traders, those who are short and those who are looking for longs, would be on the wrong side of the market. That's why flat are really that interesting, especially when they are finished, when a lot of traders on both sides of the market were stopped out. That's when we can expect some very strong move when no one expect it will happen, and that's usually in that case could be to the downside. Of course, if we see these levels retested, then I think that it could be quite interesting to watch what will happen up here. Now, if we also take a look on cable, as you know, pound has been one of the weakest last week. We have seen a pretty nice reversal to the downside. If you were with us last time, then you know that I was hoping on a wave B, wave 2 to be a bit more higher here towards 1.3750 or so, and unfortunately this did not happen. In fact, market finished the week below this trendline support, so I think that after a current rally we could basically see more weakness. Watch for a very nice resistance here around 1.3570 or so. This could be quite attractive zone for potential new sell-off as long as the market is trading below that level. I still think that there is a chance that in the next few weeks we could retest this very important level, which is basically spike low from swing support basically from mid of January. Looking at Aussie, now I adjusted the wave count on Aussie this morning. As you know, 2 weeks back or so, we were looking, and basically we were bullish for since the beginning of the year, but then when market was trading up here, we were looking for a wave 5. So we know that after every 5 waves, market will make a pause, and we don't know what kind of pause will this be, or maybe even change in trend. The most important is that we focus on structures, right? That we don't try to go too far with our predictions, but we respect what the market is doing and what kind of a price action the market is forming. So with that being said, I have been looking for a wave 5 up here, but after opening the charts this morning, I immediately spotted that this market somehow is still moving sideways here. I know that there is still a chance that we will see a drop, but if I zoom out a little bit, then I came out with an idea that basically this could still might have been just an extended wave 3, and we have still seen a wave 4. That's one interpretation, so that suggests that we could see another push higher into wave 5. Especially if dollar index would really retest slightly lower prices. Then another interpretation that is possible is that what if that's a wedge pattern, and even wedge pattern here ending diagonal is pointing for another push higher here. So I came out with an idea that there is greater probability that market could retest the highs rather than make any kind of a sharp drop here, especially if we consider that this decline can be counted in 3 waves. So we respect what the market is doing, and I think that there's a good chance that we will see another high here, and then maybe important reversal could happen. Also, we have the inflation from Australia that will be reported I think in the next 24 hours. 3.7% is what they expect, down from 3.8%. So of course it's still high inflation. That's why they hiked recently, and they are watching this data closely. And of course, if inflation will be strong, it's very probable that they will be looking for more hikes, and this could keep Aussie in uptrend. Also, looking at Kiwi, this one is the most interesting one. Notice that this pair still did not retest these highs here from July of 2025. So even if that could be a counter trend movement, keep in mind that ABC formation has a 5-3-5 structure, right? And if that's the case, then we are missing one more leg here. We are missing wave 5 of C, because that was a very nice push to the upside. If you were tracking our wave counts and be in our webinars months back, then you exactly know that we have been looking for a bottom down here with an ending diagonal. Market made since then very nice higher swing highs and higher swing lows. We even saw a beautiful strong break out of this downward corrective channel, which usually is a confirmation that you are in a new resumption of a higher degree trend, which means to the upside, because that was the first recovery that matters. So I think that that was a wave 3. You are now in a wave 4. Now wave 4 obviously can form different type of wave structure, can be a triangle, can be a flat, can be even combination. But I think that we are now closely moving into some very attractive support zone. So for a triangle, we already reached the first level at 5,950. But if it's a flat, of course, we can even see a spike below 5,930. So hold this zone with a marked with the yellow box. It's pretty interesting. It could possibly be a very nice area to watch for potential rebound while the market is trading above 5,855 level. So both Kiwi and Aussie are now showing us the picture that could see more gains here. And if we consider that maybe stocks are still sideways, and that's when maybe data itself for Australian dollar, for example, could be even more important and could be the important trigger that could really leave the prices higher. But if stocks would also see some movement out of this range to the upside, it would be even more beneficial for the Aussie, right? Because risk on mode is usually bearish for the dollar. More importantly, it's bullish for commodity currencies. Now, looking at the S&P 500, I still in the camp that we have a deal with an ending diagonal, but I'm not really sure if that wave 4 is finished here, or maybe we can see another retest of that spike low, and then we see next leg to the upside. The problem is that if you will zoom in, that was a 5-wave decline, and that looks like a very slow corrective rebound. So I'm in the camp that will not be surprised if we see a retest of the lower support levels, so rather prepared on some more stops to be picked up down here before market may possibly stabilize. But I came out recently also with an idea, what if this is also, I showed you here, a potential running triangle. And here it is when things becomes pretty interesting, especially when you look at the price action, let's say for a few weeks in front, because in either case, even if we get wave 5 to the upside, up here will be limited upside, because moves out of a triangle are final in a higher degree sequence. And if it's an ending diagonal, and we will see another push to the upside, then we know that even ending diagonal will suggest limited gains here. And why happens this? Well, if you look at the structure here, you can see that basically we have here the potential shape of an ending diagonal, right? So you can draw trend lines like this, right? And you will see the limited upside at this upper trend line of an ending diagonal. But also, if I copy this and just give you the presentation here, notice that I can also label this as a potential running triangle, and it's the same structure, right? So in either case, moves out of a running triangle will form a potential top in a wave 5 or final stages of an ending diagonal, and you can see that it's the same shape, it's the same movement here. So we basically have to consider both interpretations, but both suggest that there can be limited upside at new highs and potential reversal lower. Of course, we will have to look for a top in place. If market will see a break below 6,600, then I'm afraid that ending diagonal is already finished here. Also, if we take a look on German DAX can also be in an ending diagonal here, but still it's uptrend and ready to retest the highs, because we cannot say that we are in a very late cycle of this recovery if we are still missing a new high here for a fifth wave. I know that some would call or look for potential not throw over but truncated fifth waves, but keep in mind that that's a very rare situation. So always try to stick with the basics and expect new highs whenever you can identify a completed free wave correction. So what's happening right now? Well, that's pretty interesting. As you know, we have been focusing in the past few weeks on this gap from January 19th. So that was a very important level already on February 12th, and then this gap has been tested on a tick a few times, twice basically here in a row before market now moved sideways. So still think that that's just a pause before market may eventually see another push to the upside here into wave C of wave 5, and then up here at the new highs, that's when we should be very careful. Now on dips, if you're looking at any kind of levels to identify, now I mean the first key support levels, super level is around 25,000, a bit lower, maybe 40 points lower, which was that February 19th, basically that was from Thursday support. And then you have also 24,700. So if you're looking for some stabilization, I think that it could happen at one of those levels before market will make a new rebound. Now looking at gold and silver. Now you know that we have been looking for a corrective recovery, for a rebound on gold and silver on both, since market made this very strong decline. So basically gold found the support, stabilized at this trend line, and now looks like that we are progressing already in wave C here out of a wave B triangle that we presented last week. So basically it means that we are on the intraday charts, we are bullish. Short term it's definitely a bullish structure, but if you want to, let's say, mid-term, it's a bit tricky, because that was a very sharp fall and this could be counter trend movement. I know that there could be a lot of, again, investors that will try to ride this new bullish wave that they think that it's unfolding. So this current bounce could be a very ugly trap here. And when it comes to the wave principle, it's definitely something that we have to consider, especially when you have three waves up from that lows. It was completely different picture when we had only one leg from that lows. So now we closely could be moving into this danger zone for this week. So 61.8% obviously was the first fib resistance, but because of the wave C length and measurements, I just think that there is even room for 5,300, and then let's see what happens up there. Certainly you don't want to chase market going into the resistance. Also, if you will look at silver, also very nice rebound as we expected. We were looking for this wave C to the upside, and looks like that there is still room for 93. Now that was the resistance from February 4th. There you have also the 50% retracement and the 61.8% around to 100 level. So hold this yellow box is something to watch for. And if you will go to the smaller time frame, maybe very nice support on intraday dip for the next few sessions could be around 84.40, but then watch out for the final push to the upside into that area before market may potentially start coming down from resistance. Also, as you know, last week we showed you this gold silver ratio chart, and that incomplete ABC decline was one of the reasons why we expected that maybe metals should retest higher resistance levels. That is happening right now. But now when looking at the basics here, so you have 5 waves up and 3 waves down, and if that wave C to the downside is really coming into some support and we'll see turn to the upside, then you know that based on this ratio and intermarket relationships, it actually suggests that if the ratio will rise, that we could see bearish metals, right? So basically, I mean, you exactly know what has happened here back in end of January and what has been happening with metals prior to that movement, right? So when ratio has been moving to the upside, metals were in uptrend. Now, if we are in a recovery phase here, it means that metals will most likely consolidate further, and that's something that we have to consider. By the way, guys, I forgot to mention, if you're first time visitor, make sure to subscribe to our channel, press a like, leave us any kind of comment below this video if you will watch this recording later, or of course visit us at wavetraders.com for more insights. Now looking at stocks, by the way, I have updated some of the US single stocks yesterday. We ran out of electricity on Friday when I had a few charts ready to post, so I posted them yesterday, and if you are a member of your stock service, make sure to check this out. I will in today's webinar want to take a look on eBay, and if you were with us, you know what we were talking about before. So we were highlighting this resistance at these gaps, and once again I will highlight and repeat that gaps are very important, and if you are looking at single stocks, pay close attention to earnings gaps, right? And this, I mean, could have a very interesting, could give you edge to your potential decisions. And what happened recently is after earnings, we have seen a very nice stabilization down here, exactly after the market came into that gap from July of 2025, and now we are starting to rebound. And looks like that there is a chance we are completing this ABC formation, and we could see a new reversal to the upside. So I think that now it's maybe after some near-term retracement, it's much easier to find potential entries and opportunities when this potential volatility is already behind. So I think that eBay is ready to provide more upside here, but of course maybe in the short term there could be some interesting setback happening, but I will keep a close eye on this one, and also if needed, of course, I will update in this our stock section here. Also, as I said earlier, we have nvidia earnings on Friday. I think it's after close, if I'm not mistaken. Let me check. Wednesday, yes, after the close. So as you know, there have been a lot of said about this technology boom, boom, and that there could be a massive corrections, whatever. We don't know when this will happen, but what we know is that everyone is just curious to see what will be the results from nvidia, but what will market do, we have no idea. But I think that there will be much easier to define the next potential move on technology sector once this data is out. Now looking at the nvidia's wave count, basically notice that this recovery from November is very slow, right? So I still think that there could be some serious resistance up there around 200 level. It's the 61 and the 78.6% retracement. So it's always the fib levels that is the most important, especially when you don't have any kind of a strong impulse from that low. So let's see what happens up here. If I would have to pick any kind of a number for potential longs, I certainly would be much more interested to look for opportunities at that yellow box where you have the former wave 4 and also more importantly the previous highs here. So if we go into that area, it doesn't mean that market will turn bearish, but most likely it would come into much better interesting zone for potential rebound later on. Someone is saying best Elliott wave channel. Well, thank you very much for that. Let's spread the word. Now that's for nvidia and eBay. Now the final part, let's take a look on cryptocurrencies. As you know, cryptocurrencies are still in a pullback. It's still a downtrend. It's a bear market, but in a bear market there are rallies, there are consolidations, and maybe there will be some and are happening some on Ethereum and Bitcoin right now. Now looking at the short-term holders here, as we discussed last time, we have seen some spikes, meaning that short-term holders start selling at the loss, and that's one of the reasons this capitulation that is causing some consolidation, and looks like that there can be a bit more upside. As I said already last time here, we don't have any major liquidation pool around these current prices, but on the upside what really stands out is probably levels around 77k. There you have also this support from April of 2025 when Trump announced those tariffs, when we have seen a massive sell-off and then a reversal, and also that was here potential resistance when you look back from March of 2024 and April levels. So on a rebound, this could be quite important level, maybe where the upside could be limited. On the downside, I think what really stands out the most at this point is around 50k, where you have this support, and then you have a massive order here around 43k. So if we go into that area, this could be quite important and interesting level to watch. Now, as you know, MicroStrategy, they are keep buying. They just bought recently almost 600 of Bitcoins here. So they are keep buying massively. And obviously we can expect that they will do more on lower prices. But the only question is how far Bitcoin can drop with for them to still hold up gains there. Now looking at Bitcoin futures here on a rebound, as we said, this 74k is the important level to watch. Above that you have this gap, which could be quite attractive, interesting potential resistance when it's filled, and we have seen these gaps that played pretty important role already in the past, so let's not ignore them if we get into that area. But that doesn't mean that we are bullish, it just means that we are in a corrective wave B rise, and we have been talking about that wave B rally already in the past here. We'll see if that one is really already in the game. But what really is maybe the most important here, that on the 4-hour time frame, that was a pretty aggressive move up. You know that we had a pretty okay, let's don't get confused by my indicators here. Okay, so here we had a pretty nice strong volume, so we know that a lot of actions happened down there, a lot of traders were liquidated, and that's why market stabilized. But now if we just try to keep things simple, we know that even if that would be a corrective bounce, it can unfold in 3 waves. So based on simple approach, zigzag is the most common one, and in such case there is room, as I said, towards the 74k. but up there is the first level to watch when it comes especially these liquidation pools. So after that, any kind of a higher degree rebound, just keep in mind that this could be just a temporary pause that could maybe drag in a lot of more, pull in a lot of more potential buyers before market eventually will cause even more liquidations on the next turn down. Looking at Ripple, this one also made only 3 waves rally. We stopped at the base channel resistance. We also broke the corrective channel support line, so all points to more weakness here, and I think that $1 is something to watch for. Very strong magic level, as you know, and I think that down here it's worth to watch for potential maybe stabilization still, then in if we look a little bit more into the future. But firstly, we obviously have to respect that market has another room for what, 30% of a pullback. Even Bitcoin Cash here is reversing to the downside after potential leading diagonal. So we, as you know, we have been talking about this strong support already weeks back, and we have seen a very spike below wave A to complete the flat, and we rallied, and looks like that this could be now a leading diagonal. After a leading diagonal, you will see a free wave movement, right? And in a free wave movement, when you have a deal with a leading diagonal, you can see a pullback all the way to the ending point of a wave 2, not of a wave 4, right? Because usually in diagonals, wave 1 will be the longest wave, while wave 5 obviously and wave 3 will be the shorter waves. And that's why you can see the pullback not only to the previous 4th wave, but to the previous 2nd wave swing support. So down here, it's pretty interesting area to watch, but of course you need to have ABC movement. So in that area, if we will have ABC movement into that zone, could be again new potential support for potential rebound while the market holds this short-term invalidation level at 425. At the same time, of course, some of the altcoins could already be trading at the new lows. Traders, I hope that you enjoyed this presentation, this video. Please, once again, press a like, make sure to subscribe to our channel, visit us at wavetraders.com for more analysis. As discussed in this webinar, we cover all of those instruments and also a lot more in our premium services. So if you're interested, make sure to check, and even you can apply for a trial. Traders, good luck this week and talk to you soon. Bye.